Hey, what's going on, everybody? Welcome to another episode of Global Cap FX. It is Tuesday, which means it is Technical Tuesday. Just got out of the gym, so I'm a little bit hyper right now. Don't mind me, but let's get right into it. For those of you guys who are already in my course, you already know what my strategy is for the most part. It's all about supply and demand, locating impulsive moves in the market where institutions are, dumping in their money or taking out all their money, causing the market to fluctuate in a strong manner. Uh, on top of that, you also have your support and your resistance. You have your higher highs, higher lows, lower highs. And I'm also going to be touching on how mitigation, which is filling in areas where corrections didn't happen, and then also liquidation play an important role on setting your stop losses in a proper area where you can avoid getting knocked out and improve your chances of being profitable in the market. All right, so I'm going to go ahead and share my screen here, and we'll go ahead and take a look at a GBP JPY. I'm in a small trade on it right now to see what comes of it, but we'll start fresh. Okay, so I'm going to start off in the daily time frame, and we are going to locate, a major support and resistance area. So I already have my first resistance line marked right here. The reason why I didn't mark it here, I'll explain in a little bit. And then my support would be here. All right, I didn't put it down here for a reason. Now, the way that I see it is support and resistance are particular prices in the market. They don't need to be totally precise, but they are areas in the market where price absolutely cannot go above and stay above. They end up coming back in, or breaking down and staying below. They end up coming back in. So this area right here, this price and this price are areas of support and resistance. Okay, those are strong prices where price cannot break through at the moment. Now, taking that into consideration, the next step that I like to tell my students to do in terms of looking for a confirmation is locating your supply and your demand zones. So what we'll do here is we'll go down into the 4-hour time frame and locate some areas that I feel are a demand zone and a supply zone. Just a quick explanation, the way that I interpret supply and demand zones is quite simple. By the way, everything that I'm sharing here on this video, from the moment I started all the way to the end, is not financial advice. Everything that I am sharing is based off my own experience. So anything that you decide to take and utilize for your own strategy is done at your own risk. For those of you who have not heard the big news on the previous YouTube video about licensing and being able to provide this as financial advice, go ahead and take a look at my previous video and you'd be pretty excited about what I just shared. Going back into the demand zone and supply zone, okay? So from what I've noticed is that demand zones, we'll take that into consideration first. Demand zones, they're areas in the market where price makes an impulsive move to the upside. So I'm going to go ahead and take my box here, right? And I'm going to mark this area right here as a demand zone, this area right here, all this right here as a demand zone. This is where price initially started its move up. Here, 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 here. So you can see that there's some consistency here when it comes to, when the market decides that it's time to reverse and go in the opposite direction. All right, so going back to the institutions, right? So institutions, our job as retail traders, our job is to locate where institutions are dumping in their money and pulling out all their money. In this case, since we're looking for a buy situation, we're looking for areas in price where financial institutions, hedge funds, all these guys are dumping in their money, causing the market to spike in an upward direction. Okay, so one thing that I like to locate when it comes to my demand zone and also my supply zone is finding something that we call order blocks. Okay, so order blocks, some people like to call them candle rejections. You would have one candle pushing to the downside relatively strong, and then the following candle completely rejects it, engulfs the entire thing. Okay, so and then actually what I would do is I would actually move this demand zone now that I'm down to the hourly time frame as opposed to the 4-hour. I would get a little bit more granular about where I place it. I place my zone, and I would put it right here. Taking this whole area into consideration right here, where price started moving up. Oops. Here. And then here, a lot of people will call this a tweezer top. If we were to go into the 3-hour time frame and took these 3 candles here at the bottom, this would ultimately turn into even these 4 candles, right? This would ultimately be, a situation like this right here with these 2 candles. You'd have a candle pushing down, and then the next one would completely encapsulate and engulf the previous move that went downward. Okay. So these areas right here, I'm a big fan of. I'm going to get into this spike below the zone in a little bit. That is what we would call liquidation of the market. I'm going to get into that. But after you find your support and your resistance, you want to locate your supply and demand zones. So we just located a demand zone. I'm going to stay in the 1-hour and locate a supply zone for you, just to give you the same idea. So as you can see right here, price spiked downward here, did the exact same thing right here after making a solid correction, coming back into what I call, again, an order block or an engulfing candle, right? These 2 candles right here is what I'm referring to. Price came back into that area where the last candle went up, rejected, came back up, next 2 candles made a strong push down. So in this scenario, some people will call this a double top, if you would, and you would probably make an entry. If not after this first blue candle with the wick, you would make your entry after this one here. And you would take that all the way down. You would take it down to at least where price started correcting right here. Because again, history likes to repeat itself. And to get a little bit more specific about what I mean by that is that price goes into channels quite often. If it's not going sideways, which in a sense is still a channel, going sideways like this, sometimes it'll go sideways like this or upward like this. So what I'm seeing here is, if I just zoomed out a little bit, you can see that price is starting to make what we call lower highs. And consequently, due to that, it also creates lower lows. Now, as you can see here, price spiked a little bit lower here. And then the spike that took place here, oops, the spike that took place here didn't quite make it down to our horizontal line. So the way that I look at it is that price spiked down, made a tweezer top, came back into our zone of demand. And it ultimately creates, it looks like it's starting to create a change in direction. Okay, so now we're looking at these here. Okay, going in this direction. Go ahead and remove all this. All right. Now going back to the supply zone again, right? You can see that there is consistency in locating where order blocks take place. Now sometimes price will go above that, but at the end of the day, if you wait for a break and retest, then you reduce your chances of getting in going in the wrong direction. A lot of people, right? A lot of people, a lot of traders, they would see that price breaks up above here and it would come back in here, not really showing you any kind of, sign of weakness. Wouldn't show you any liquidation, any wicks in the area or anything like that. People would just get into a buy immediately, anticipating it to keep going like this. But from what I'm seeing, so I don't see anything that signifies that price is planning on making another push down quite yet. So price starts trickling up and down in this sideways range right here. And we're waiting, still, looking at these areas right here, there's nothing really telling me that a buy is taking place. There's no engulfing candle, no impulsive moves to the upside. There's nothing telling me that it's going to continue to go up as far as strength. But on the top side of things, if we were to focus in on this area right here, if we were to just focus in on this area right here, we have another supply zone within the market. So if we go to the daily time frame, you'll see supply and demand zones. If you go to the 4-hour, there will be supply and demand zones. If you go to the hourly, there will be supply and demand zones. And the objective for you is to, locate the ones that are in the higher time frames. This is my strategy. Again, this isn't advice, but the goal here is to locate the ones that are in the hourly, I would say, maybe the 4-hour, depending, and then drop down into the 15-minute, 30-minute time frames and locate a potential signal that signifies it's going up or down. So looking at this here, right? So we have this final candle, this black candle that goes up, and then we have a push down. I'm gonna go ahead and make this blue. Okay. And then the whole time in this area, all it's showing is weakness, 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 and then a push down, right? You have some consolidation after the impulse move down, and then look what it does again. It comes back up and corrects this order block impulsive move area right here with these wicks showing more sign of weakness and a desire to go down. And lo and behold, that's what it does. So the biggest thing here I would recommend for you to do, just a quick recap, is to locate your support and resistance, which are your ultimate highs and ultimate lows. Ultimate highs and ultimate lows. After you do that, you locate your supply and demand zones. In the daily, this is what it would look like. Boom, right? Boom. The final candle that went down. In this scenario, it's the final candle that went up. In this case, it would be this small one with the evening star. These are areas of interest for you, especially in the daily, to get into trades. Maximizing your reward, minimizing your risk. Okay. All right, so we went over supply and demand. We went over support and resistance. Another thing that I want to go over really quick. Another thing that I want to go over really quick is liquidation. Okay, so liquidation is all about these candles. I'm sorry, the prices that I made right here. Okay. The horizontal lines that I made right here. Boom. And then boom. Okay. So a lot of the time, if price is not making, you know, a quick higher low or a quick lower high, doing the retest, you know what I mean by that, just to quickly illustrate. If it's not going up, coming back down, creating a you know, a retest situation from the previous level of resistance and then continuing up, or if we're talking about going down, push down, retest of previous support, which is now resistance, and then continue down. If it doesn't do that, sometimes price will protrude past what used to be your support line, liquidate any kind of stops that traders have below that lowest point, and then get prepared to swing back up to the upside. And the reason why institutions do that is because they need more volume, they need more strength in their moves in order for, you know, prices to make moves such as this. They need to collect as much money as possible in the form of in the form of retail traders stop losses, and then it will start creating its higher lows and lower highs. So what I'm looking for here is, you know, potentially we could be coming back up. We could be coming back up here to this area of liquidation. And potentially start seeing moves to the upside. So that's another thing. And then also you can see that here on the top side with your resistance. You had price being at an immediate low, excuse me, at an immediate high right here. Price decided to protrude above that area and then push back down to the downside after taking up people's stop losses, collecting money, and then pushed a total of 800 pips, 900 pips. So take that into consideration when you're looking for stop loss. A good way to avoid that type of a situation is to go down into the smaller time frames and look for those signals that tell you that it's time to leave. Chances are, you know, when people see that it's in a demand zone, they'll immediately get into something, right? They'll see that this was your order block. And let's say that we're here in price. Let's say that we're here in price and people want to get into a trade. They get into a sell like this, even though it still isn't telling you shit that it's going to be going down yet. People just want to get in because we're in the demand zone, right? But you got to wait. You have to wait for price to give you a sign. Just because it's in the demand zone doesn't mean that it's ready to go. You have to wait for it to give you further confirmation before you get into a trade. So we're going to go ahead and continue pressing the play button. Okay. All right. So there's our spike, taking out people's stop losses because again, people are putting their stop loss just above this area right here. They're getting knocked out. But for people who are patient, they wait for this spike to the downside, right? They wait for the spike to the downside and they wait for a retest. This right here, this candle right here is the beginning of the retest. And the way that I know that is because we first had an impulse. We go down to the hourly time frame. And then as you can see, there's another order block right here where price initially impulsed down. And then from there, you would set your stop loss above the actual highs that took place there. And you would let it ride, okay? And that's how you do it. But that's all I have for today, guys. I appreciate your time. Thanks for watching. If you have any questions or concerns about what I shared today, feel free to reach out on my Instagram, which is GlobalCapFX. Or if you want to leave a comment, I am quick to respond on there as well. But until then, I'll see you on the next video. Stay safe.